The message says the claim has been approved. You feel the release before you even finish reading it. The hard part is over. The loss is recognized. Then your eyes catch the number underneath, smaller than expected, followed by a word that suddenly matters more than the approval itself. Excess. Applied. That's the paradox. You're covered, just not for the part you thought mattered. The approval feels like a finish line. You've already replayed the incident enough times, filled the forms, sent the photos, waited. Approval is supposed to be resolution, so when it arrives, your body reacts before your mind does. Relief first, calculation later, and calculation is where it turns. Because the excess isn't presented as new information. It's presented as background, as something that was always there. The tone doesn't shift. Nothing sounds wrong. The system behaves as if this was obvious all along. But it wasn't obvious when you needed it to be. This happens after a minor accident, damage that's real, but not dramatic. You expected a repair, not a windfall. The approval confirms that expectation. Then the amount lands, reduced, subtracted, framed as standard. You realize you're paying more than you thought for something that already cost you, not denied, just diminished. You search back through what you remember agreeing to. You remember an excess existing, vaguely, as a concept, a small trade-off for protection. What you didn't picture was this moment, when the excess becomes the dominant number in the story. The claim is approved. The payout is conditional. Another version appears with medical cover. The treatment is accepted. The provider is recognized. The paperwork goes through cleanly. You feel lucky, organized, responsible. And then the bill arrives with a gap in it. Not an error, not a dispute, just the excess quietly taking its share. It's not large enough to feel like a rejection, not small enough to ignore. It sits in that uncomfortable middle where you're supposed to accept it without comment. After all, the claim was approved. That's the leverage. The excess only shows its weight once the outcome feels settled. When pushing back would feel ungrateful, late, awkward, as if you're arguing with success. Homes make this sharper. A repair is authorized, contractors booked. The process moves forward. Then comes the reminder that the first part is yours. The excess applies per claim, or per incident, or per category. The wording doesn't matter anymore. The cost does. You realize the excess wasn't a detail. It was the point where risk never left you. The mechanism here isn't hidden. It's deferred. Excess exists to keep exposure on your side of the line. Approval just confirms that the system is working. Working means sharing the loss, not removing it. And because the excess only becomes real after validation, it feels earned by the system and surprising to you. You're not shocked that it exists. You're unsettled by when it appears. After relief, after recognition, after you thought the risk had passed. That timing matters. Because by the time you see the excess clearly, you're already committed. The claim is live. The repair is underway. The alternative, walking away, would mean absorbing the entire loss. So the excess holds its ground quietly, without resistance. The approval locks you in. The excess takes its cut. What stings isn't the money alone. It's the shift in perspective. The moment you realize the protection you trusted was never about removing loss, only about redefining how much of it you'd tolerate. You thought approval meant safety. It actually marked the point where your remaining exposure became unavoidable. And the most uncomfortable part is why this works. Not because you didn't read something, but because you trusted resolution. You trusted that once the system said yes, the risk was over. The excess doesn't punish carelessness. It waits for confidence. The moment you felt finished was the moment you found out what was still yours to carry.